Welcome, and thank you for participating in today's webinar entitled 2018 Hiring and Compensation Trends, Sweetening Salaries, How to Recruit and Retain Accounting and Finance Professionals in 2018. Today, as I mentioned, I'll be talking to you about hiring and compensation trends in accounting and finance. The findings I'll discuss with you are based on research we conducted, that's Robert Half, in the U.S. for the 2018 Salary Guide for accounting and finance professionals. One of the most valuable resources and many resources that we make available to businesses, accounting and finance professionals. Our new salary guide includes starting salary information for more than 190 accounting and finance positions. Did you know that CFOs have a hand in shaping corporate culture? A recent survey from our company found that 51% of CFOs said they play at least some role in shaping corporate culture. With the changing role of the CFO, finance executives are having more of an influence on their organization now than in the past. Proper financial reporting and management set a model for the firm's business, ethics, and corporate culture. In the same survey, CFOs reported several steps, including using the firm's values to guide the actions and their actions, and helping to develop the organization's mission, and defining the desired environment. What does this suggest? Executives should highlight corporate culture as part of the hiring strategy, which is a priority for many of the job seekers in which we surveyed. So let's I'll introduce myself and our co-presenters today. My name is Paul McDonald. I'm a Senior Executive Director at Robert Half. I've been with Robert Half for over 30 years. Currently, I'm the Senior Executive Director, in charge of many things, corporate PR and marketing related. And interesting fact about myself, I started my career 3 years with Price Waterhouse in the Northeast of the United States. Katrina?
Hi, good morning everybody, or good afternoon for those on the East Coast. I'm Katrina Fallon. I'm the Chief Financial Officer for Silver Spring Networks. We are a company that is in the Internet of Things space. We're enabling smart cities, specifically across electric, gas, and water utilities, and we're making the utilities much smarter. And in the next couple of months, my company is expected to close an acquisition. We're being acquired by a company called Itron. So that is exciting things for us and our company going forward. I guess we were asked to provide an interesting fact about ourselves, and well, the interesting fact about myself is that before I became a business person, I was on the U.S. Olympic rowing team and participated in the Barcelona and the Atlanta Olympics for the United States. That was more than 20 years ago. Sure.
So, Eric?
Thank you, Paul. Hello, I'm Eric Nadeau. I'm the Chief Financial Officer at Foundry Commercial. We are a commercial real estate services and investment company based in Orlando, Florida. We have 12 offices throughout the Southeast, including Orlando, Charlotte, Raleigh, Nashville, Atlanta, Dallas, and South Florida. We have about 300 associates, and that has doubled in the last 3 years, and that includes over 30 accountants in our property management line of business. And they perform outsourced accounting services for owners of over 200 properties. Then we have another dozen or so accountants that are in our corporate line of business and our fund accounting teams. And we've acquired and developed over $1 billion of commercial real estate assets over the last 24 months. I guess an interesting fact about me is nowhere near Katrina's. So I'm going to say that I watched Katrina 20 years ago during the Olympics, and I'll just leave it at that.
Thank you.
Those are big shoes to fill, so.
Yeah. Thank you very much, Eric. Thank you, Katrina. And again, welcome to everybody. So before we get started, I'll address a few of the housekeeping items. Some of your questions that have already been asked will be are hopefully answered with this housekeeping. Please note that the small icons across the bottom of your webinar dashboard, they provide access to various tools, including technical support, evaluation survey, today's slides, and the speaker bios. We will have a Q&A session at the end of the discussion. Please enter your questions in the open field on the right-hand side of your webinar dashboard, and we'll answer as many as possible. For questions related to technical difficulties, please click on the yellow Help icon. This presentation is eligible for 1 unit of CPE credit. To receive your CPE credit, you must answer 3 of the 4 polling questions that will appear on slides during the event and be in attendance for 50 minutes or more. Certificates will be sent out via email 7 to 10 business days from today. And an evaluation survey is available by clicking on the teal survey icon. We really would appreciate it if you would fill this in and submit the survey. Your feedback guides us in the future on providing valuable content. And the survey will automatically open at the end of the webinar. Additionally, we'll be tweeting during today's webinar. Feel free to join the discussion at #SalaryTalk. So, moving to our first polling question. We tried to make this fun, get us going with the discussion today. Which superhero would make the best accounting and finance professional? You only can click one, folks. Batman, Wonder Woman, Captain America, Iron Man, or the Flash. So I'm not sure, Katrina, which one would you choose if you were to answer this question?
No questions. Wonder Woman.
And Eric?
I'm going to go with the Wonder Woman as well, although her attire may not quite fit today's corporate environment. The fact that she has an invisible jet but will not cause any issues with your CDNA with the SEC, and she can also deflect bullets because that's pretty much job number 1 when you're CFO.
That's very good. So if we can push the results to everyone, well, Wonder Woman wins out. What do you know? Our panelists are on the same page with the audience. That's outstanding. Next slide, please. So just an overview of today's discussion. We'll be covering the financial hiring environment, 2018 hiring trends, the new recruiting and retention reality, successful negotiating of compensation packages. So let's first dive into the hiring environment. The U.S. added 261,000 jobs in October. This just came out last Friday, according to the latest report that came from the Bureau of Labor Statistics. The unemployment rate edged down to 4.1%, the lowest in 17 years, since December of 2000. Another fact that typically doesn't come out, unless you really dig into the report, the unemployment rate for college-degreed workers who are 25 years of age and older, the most sought-after candidates by employers, dropped to 2.0%. That's 2%. For businesses in hiring mode, the October jobs report underscores the steep challenge facing the current hiring by employers. The unemployment rate, as I mentioned, is a 17-year low, which means few skilled workers are actively seeking new opportunities. Now let's even go a little bit further and talk about accounting and finance unemployment. It's 4.1% overall, as I mentioned. However, when you dig into some of the accounting and finance positions that many of you serve in or are seeking to hire, financial analysts at 0.6% unemployment, compliance-related officers 1.1%, accountants and auditors 2.2%, financial managers 2.5%. You can see some other in the credit, bookkeeping, and auditing clerk area. So it's just one of those environments we haven't seen in a long time, and it's not new. This has been coming forward in this, with a downward trend in unemployment for the past couple of years, especially in accounting and finance. So now let's take a look at the Jobs Openings and Labor Turnover Report, or what's commonly referred to as the JOLTS report. Hiring issues stem from the fact that more professionals are willing to move to new opportunities, creating retention issues for employers. According to the most recent JOLT report, or Job Openings and Labor Turnover Report from the BLS, which was released just yesterday, the number of professionals who quit their jobs in September was 3.2 million. Quits rate was 2.2% and continues to indicate confidence by the worker in seeking other opportunities. Companies are finding they need to reward their best people before it's too late. They need to boost their retention efforts to keep those employees. Many employers are finding that the hiring process takes longer than they'd like. CFOs interviewed by us at Robert Half said it takes 4 weeks on average to fill an open staff level or finance position. On average, across the United States, that is, 4 weeks. So Katrina, this question for you. What hiring challenges are you experiencing, and how are you addressing them currently?
Yeah, absolutely. So hiring for finance and accounting roles today is pretty challenging, especially here in Silicon Valley. Some of the bigger issues I run into is that there are very specific roles and very specific skill sets within those roles. So take payroll as an example. If I need a payroll accountant, it's not just someone with payroll experience, but it's someone with the specific ADP experience, international entities experience, dealing with the specific benefit packages that we have. And even within ADP, it's what version of ADP have they used in the past. So it's challenging to find people with the directly relevant skills that we require. And to be honest, the way that I deal with that is by going with an outsourced hiring organization like Robert Half or some of the other firms, where I can get someone that's already been vetted and where they know what the skills are. That if I ask for specific skills, that kind of a company can help me find a person with those skills. And another challenge, I was hiring a VP of finance, and that took far longer than 4 weeks, to be honest. I mean, that's the type of role where I was looking for a broader set of skills that was probably harder to find on a resume. This person didn't even need to have run FP&A in the past, but I needed someone who was analytical, who had leadership ability, who had presentation and strategy ability, and a broad set of experiences. I needed someone who could be a problem solver for me in the finance organization, and that was a much harder find. And I felt like I really needed to participate in the hiring of that individual in terms of scanning the resumes and looking at what types of experiences I thought could help somebody build up that skill set necessary for that job.
Great comments. It is extremely challenging, especially in the Silicon Valley arena, for sure. So next slide, the hiring environment. When it comes to hiring, employers are looking for specific attributes in accounting and finance candidates. Katrina just mentioned a few of them. Okay? Strong functional skills are always in demand. Okay? Professionals with good general accounting skills, Excel skills. Some are even looking for QuickBooks, proficiency in cloud applications, ERP knowledge to support business growth, just to name a few of the functional skills. In addition, what we're hearing, organizations looking for outstanding non-technical abilities or soft skills, as many people call them. Strong communication skills are key, as are leadership abilities, adaptability, and flexibility. The ability to collaborate across multiple departments, and people with multiple language skills. Now more than ever, managers are looking for qualities such as patience and empathy and practical prowess, collectively known as EI or emotional intelligence. This is one of the many steps companies are taking to hire to a cultural fit. Certifications and professional credentials are extremely sought after today as well. The clubhouse leader is definitely the Certified Public Accountant or the CPA designation. Others could be and are the CGMA, Chartered Global Management Accountant, the CIA, Certified Internal Auditor, Certified Payroll Professional, and the Certified Management Accountant. So Eric, when you look at skills, and what skills do you look for in staff level professionals, and how to prepare for management level roles, and what about management level professionals preparing for executive roles? Just what skills do you look for?
Paul, if a staff accountant or a staff professional is on the cusp of being promoted to management level, there's a general assumption that the skills are there. The differentiators, though, are characteristics that are difficult to learn in college. I encourage staff professionals to be self-starters, build relationships, and always be positive. Don't get caught up in the water cooler scuttlebutt. Your daily routine will become significantly different once you transition to a management role. It's literally like life before and after kids. I can't remember what life was like before I had kids. And very similarly, once I moved into a management level position, work was just a part of the day. The rest of it was managing relationships and team members. And along those lines, business processes are becoming more and more complex and automated. So you have to constantly keep your knowledge up to date. And information is at our fingertips at the ready in today's internet environment, but you have to transform that information into knowledge. And that comes through application and experience. And if you're a management level professional preparing for an executive role to be a CFO, good luck. Markets and regulations and business processes and accounting standards are rapidly changing, probably faster than ever. And you have to be able to understand the day-to-day mechanics of how your company operates and how you make money. But you also have to translate those processes into driving the business forward. How does your team and those processes impact your company's strategies? Are they fuel or are they friction for the business? The CFO needs to be a trusted advisor, not just a gatekeeper to the budget. You've got to be objective, you've got to be a listener, and a consigliere to your CEO. Because once you're CFO, you have to manage up, out, and down. So strong communication skills and relationship skills are mandatory because you're interacting with board members, shareholders, peer executives, and your direct reports. And each of those constituents requires a unique communication approach. And your audience will change with each phone call or email. So I think the real differentiators for those promotions really comes down to your relationship and your ability to apply the knowledge that you've gained.
Yes, extremely important. Now, Katrina, just something you mentioned earlier about the VP of Finance that you were just looking for. How do you measure the cultural fit and just maybe those soft skills that you were looking for to make sure that this person, besides having the background applicable and usable in that VP role, but you mentioned a few things about that cultural soft skill fit.
Yeah. So I'm a big proponent of kind of EQ or emotional intelligence. And I'm a big proponent on building a team, not just hiring individuals. And when I was looking at this candidate, so it wasn't just myself that interviewed. It was, certainly the recruiter would scan the resumes. But I had the team and direct reports actually interview this person. I wanted to make sure from, I guess, a peer level that the lawyers that he'd be working with, the controller that he would be working with, some of the, heads of sales, because this person was also going to run sales operations. I wanted those people to find that this is someone who is intelligent, who can challenge me, who can think outside the box, and someone that I can work with on a day-to-day basis. But then I also had direct reports of this person kind of participate in the interview process. And that was because I want someone that my direct reports are going to look up to and someone that they feel that they can learn from. And, I judge this person obviously has the qualifications based on the experience. And we focused most of the interview process on, is this person going to fit in and actually be successful in this role? And so it's kind of a different type of interviewing.
Well, it's what you just articulated was becoming more common as we deal with our clients. So I'm glad to hear that that's the way, the bottom up is great to measure the cultural fit. And as you said, can they learn from them? Because that helps with what we're going to talk about in a few minutes, and that's retention and engagement. Yep. Okay. Thank you, Eric. Thank you, Katrina. So next, let's look at a few of the in-demand positions. We listed out, 8 of them. Just as we one that might be left off here would be a data analyst, anything data related, but that's embedded in a lot of these titles as well. Baseline in any one of these positions is technology knowledge. There's not a position that comes through today that doesn't demand some aptitude, and it's increasing, I might say, some sort of technology knowledge. And as I mentioned before, cloud computing, Excel skills, advanced Excel skills, some sort of software as a service, cloud computing. So just thought we'd mention a few of these hot positions. So what's driving the demand? Companies across multiple industry sectors such as healthcare, real estate, nonprofits, construction, technology related, they're all hiring finance and accounting professionals at every level. Also some new regulations, new revenue recognition and lease accounting standards. Anyone with professional experience with revenue accounting, revenue reporting, U.S. Securities and Exchange Commission reporting, especially high demand. There's also a shortage of skilled accountants, and corporations are doing everything they can to recruit them, relying on referral bonuses to employees, even offering former employees, or what we like to call boomerang employees, better opportunities at higher salaries. That is, if they have the skills to do them, of course. Finally, companies are embracing big data. They're accelerating demand for finance professionals, as I mentioned earlier, with technical skills and advanced Excel, Access, Python, and software as a service. Katrina, in your company, what's driving the hiring of finance and accounting people within your departments?
Yeah, so I'd say there's kind of three things. The first being the hot job market, and specifically within revenue accounting driven by 606 or ASC 606. An example would be my top director of revenue had been at the company for 8 years, just an expert in our complex contracts, and he really felt that he could be better off going off and building out a consulting company where he could work 10 hours a week for a bunch of different companies and staff people in this 606 type of a role, because it's so in demand. And I know that we're also contracting with KPMG to help us on that. But so it's lost to other companies here in the Valley. Sometimes it's the shorter commute. I have kind of people in their first or second job, and they're eager to go work at a hot tech company like Google or Facebook. And so sometimes I see that the retention of those employees tends to be, a shorter period of time, 1 to 2 years, just because they're trying to go out and get that next job. The second thing would be complexity and all these new regulations. So 606 certainly being the top one. That has required us to expand the size of our revenue team. For 2018, we will need to report our numbers, our GAAP revenue in both ASC 605 and ASC 606, and that's going to require some additional manpower. So there's certainly demand for next year. And then the third would be the thing that I'm hiring for right now is leadership, not just management. And this goes to the fact where people might come up through an organization and become a real individual contributor, a real thought owner in terms of how a function is done and managed. But as they move up in the organization, what I'm looking for is their leadership ability and their ability to inspire and basically get more engagement out of the rest of their team. And I've struggled with that sometimes in terms of finding a person who can continue to move up in the organization and broaden their skill sets to include leadership rather than just managing a team. And it's what I found too is that if you don't have the right leader on a team, that can lead to a lot more turnover. And I've definitely had that experience in the past.
Yes, no question. And Eric, you were talking about this earlier in the hiring environment when we talked about the staff level moving up to management. Do you have any words of wisdom and how to measure that leadership ability in some of those staff level people before they move into management roles?
Yeah, I guess I'll give you my view as it pertains to the CFO position as opposed to being in that staff role, and what I've encountered in those situations, the thing that separates entry level and staff level performers is their self-starter attitude. I've had situations where I've had two employees that will be working through a project, and will assign a project to one individual and assign a similar project to another similarly staffed and competent individual. And with one of the individuals, all I hear back is the amount of work that has to be done and how busy they are. And I'll get to it once I get through this list of everything I have to do. And with the other individual, who has easily as much workload or more, the only thing I hear back are the things that she was able to accomplish that I didn't even know she was working on. So in addition to excelling and getting done on time projects that were assigned to that individual, they're also going above and beyond. And the hours put in were probably equivalent between the two of them. It really is the attitude and the ability to integrate into that higher level view of the organization. Those are my thoughts.
Yeah, really good thoughts. Tough to measure, but it's usually demonstrated in some capacity, just like you articulated. Let's move to the next polling question, if we may. Which most closely relates to turnover at your company? A, turnover has increased in the last 3 years. Turnover has decreased in the last 3 years, and it's stayed the same. And just select one of the answers, please. And I know that most of the companies in which we're dealing with right now, and it's a kind of mirror image what we just went over with the quits rate at the JOLTS report information that was released yesterday, that there's more confidence out there and people are looking at new opportunities, because the number of opportunities being advertised today is there's a plethora. All-time high, if I'm not mistaken, it's about 6.2 million jobs last month were advertised. So the results, please. Yep, and either stayed the same. That's about I'm surprised at 38% there, but turnover has increased in most companies in the past 3 years. Next slide, please. So let's talk about some recruitment and retention strategies, and how you've had to adjust to attract and entice skilled candidates to your companies and retain top talent. So the recruitment strategies, as we've been talking about, it's an extremely competitive market for talent. That's driving salaries higher, especially in certain markets and positions, as Katrina said, in the Silicon Valley area. Employers are offering bonuses to sweeten the pot. Initiatives aimed at providing work-life balance are more common as well. Firms are offering telecommuting, flexible hours, and additional vacation days, and they're instituting flexible time off policies as well. Hiring managers are increasingly conducting legally approved pre-assessments to determine whether a candidate is a good fit or not, thus preventing some of the bad hires. Bad hires can result in wasted time, more stress on the team, and the specific manager. So Eric, a question for you. Have you found that your recruitment strategy has changed over the last 3 years? And how do you market your company to some of the job seekers that you and the team are seeing?
It has. It's not so much that it's changed significantly. It's just that we're using the internet much more so than we have in the past. Here at Foundry, about half of our new hires come through referrals, which is great for us because our team members know our culture and they know what personalities will thrive in our environment. So that really makes the onboarding more successful. The first year is, without a doubt, the most difficult for a new employee, and just integrating into the organization and understanding what their role is and what the culture is at the company. So along those lines, LinkedIn has also become a strong sourcing tool for us because you're really sourcing from a pool within your business circle. They know you. They generally know what your company stands for and how it operates. So referrals through LinkedIn are really, really helpful. And remember, culture trumps strategy every time. If you can't identify and integrate that new employee to your culture, it doesn't matter how smart that individual is, it's going to be really, really difficult getting them successful. But that said, we're still pretty dependent on recruiters in Orlando because it's really a hot market right now. In order to differentiate ourselves, when we try to market Foundry, because Foundry is personal, we really heavily market our culture as a differentiator, especially in the commercial real estate world. We're really trying to build a different kind of company. We work hard, we serve others, we're cloud-based, which provides some flexibility in a work-life balance, and we offer challenge through growth. So each new team member comes on board with a task of really building the company side by side with partners and executives, because every month there's something new that we haven't encountered, and we're building the organization really step by step.
I like the stat about half come for referral. That shows that you're engaging your current employees, and obviously they feel that the culture is a good fit, is good for either friends or family or other acquaintances. So hats off to you on that.
Thank you. Thank you.
Next slide, please. And we'll talk about furthering recruitment strategies. With a limited talent pool, executives are adjusting their expectations during the hiring process. They may, for example, hire less experienced individuals and provide formal and on-the-job training to expand the skill sets. Aside from offering more attractive salaries, finance managers are offering more perks as well. They are following the example of some of the tech companies in the Silicon Valley and throughout the United States at this point, providing free meals and gym memberships. They are embracing a more casual dress code as well. Employers are also offering more formal educational opportunities for these finance and accounting professionals interested in career growth. And last but not least, interim professionals are often the answer for companies needing to complete projects and maintain productivity while they search for full-time employees. Project professionals can also supply subject matter expertise not available internally. Additionally, they can leave the knowledge share and train other staff during that project and contract engagement. So here's a question for both Eric and Katrina. First, Eric, what benefits do you see in hiring interim professionals for projects, and are you currently working with any interim professionals?
We are. We've used temp and contract arrangements throughout our platform. That's including accounting and finance, but also in our property management lines of business and HR, really across the board. And some of these individuals, we actually run them through as independent contractors, and others are just straight temp and contract to hire. Most of the independent contractors we use are people who have previously been with the company. Maybe they've wanted to take an early retirement or just wanted to go on sabbatical. Maybe it was paternity or maternity leave, something like that. But what's beneficial about contract employees or temp to perm arrangements is that we have a lot of newly created positions, and it gives us an opportunity to assess whether we've defined that role properly and what level of competence and experience do we need to hire into that role. It also provides us the time to assess the cultural fit of the prospect before we decide to go and bring them in as a permanent employee. But that being said, we also strive to make sure that these folks are included in our organization, that they're not treated like contract labor, that they're here just to do a job and go home. That's just not what Foundry is about. We want to know what makes them tick. We want to know what we can do to help them succeed. And when we come to work, we're not just working. We're sharing time and talents with each other for a common goal. So even though we do use them throughout the platform, we try to treat them and incorporate them with our full-time employees.
That's great. And Katrina?
Yeah, I mean, certainly we use interim professionals quite a bit here. I probably, at any given time, I probably have 5 or 6 on staff. And, one of the big benefits is just that it's faster time to hire. If somebody does resign, I'm lucky if I get 2 weeks notice. And in a lot of my key roles, I need someone very quickly. So it's very helpful to have good qualified candidates that I can get in a couple weeks. Another benefit has to do with kind of the innovation of the role that we were talking about. And really I see it in up-leveling the talent. Sometimes I think we can be resistant to make a change in an employee or in a role because of the ingrained knowledge that they have. They know the complexities, they know where the berries are bodied, so to say, and sometimes we can be resistant to change. And I've seen when I've brought in some of these contract to hires that it opens my eyes a little bit on what the role should be and what I should be expecting out of that position. So that's been very helpful. And then I guess the third reason is just about this trial period. It's a great opportunity. Someone works out, fantastic, and if they don't, then that's okay too. And you can find someone else to take that trial period role as well.
That's great. So let's look at some of the retention strategies. When you have ready, willing, and able employees, you want to do everything you can to keep them, obviously. A survey we conducted reveals that 42% of workers said they're likely to look for a new job within the next year. And for millennials, the statistics jumps to 68%. I think it's obvious how this affects employers, but let's talk about that just for a minute. CFOs are worried about losing key staff. When we surveyed CFOs, 45% of the CFOs are concerned about retention of current. 36% believe they could lose staff in the coming year. To boost retention, companies are putting more focus on career development, as I mentioned earlier. Mentoring programs are very much emphasized, and enhancements to corporate culture, as we've been speaking about. So, Katrina, has your retention strategy shifted in the last 5 years? And if so, what measures are you taking to ensure that you're keeping the top talent?
Yeah, so I think definitely the retention strategy has shifted in the past few years. Now, some of that may be industry-wide, and some of it just may be that I have more experience now in terms of what works and what gets us the results. But 5 years ago, I think the conversations tended to be about salary. And, okay, well, yes, sure, I'll give you a raise, or you'll get a bigger raise than expected, that kind of thing. I think today the focus is on employee engagement. And individuals, they want to be getting a good experience. So what experiences can I provide? What exposure to the management team, to the C-suite, exposure to new types of experiences within the organization, whether it's M&A, whether it's working on a board deck or helping me with strategy, and how can I help them with career planning and progress? So I admit that I don't think they're going to work for me forever. So how can I be helpful to that individual in terms of making sure that I'm giving them experiences today to set them up for their next role? So we set clear goals for our team. We have objectives that we're working on together, and it's all about collaboration. I also have all-hands meetings and skip-level meetings, or one-on-one meetings with people who aren't directly on my staff. And this is something where some of my staff will come to me because they think they have a retention issue, and they're likely to lose a key player. I certainly then make an even greater effort to sit down with that individual and just understand where their head is at in terms of their career, and to make sure they understand how important the work that they're doing is to me and to the organization. And so give them a little bit of one-on-one appreciation and acknowledgement for the work that they're doing. And then thirdly, it would be a commitment to, if I hear about leadership issues that are creating a lot of upheaval in the organization, I have to be upfront about those and deal with those issues and make sure that I'm building a strong team and a strong leadership team that's leading the rest of the organization.
Great tips and strategies to share with the group. Thank you.
Mm-hmm.
So let's talk about negotiating some compensation. And money's on everybody's mind. So one way to ensure you're keeping great people, to one way, not the only way, but it's is to make sure you're paying them at or near or above market, for your area. In a survey we conducted among HR, human resource professionals, compensation and benefits executives, we found that companies typically determine salary increases in a number of different ways, including merit calculations, cost of living adjustments, or length of service, and other more detailed areas. In our research, we also discovered that 65% of companies tie compensation to either individual or company performance. Eric, this question for you. How does your company determine salary increases? And I'm sure all your employees are listening intently right now.
Right. 3% across the board, no adjustments. No, I'm kidding you. We conduct an annual review of salaries, and we benchmark them against industry trends. I think it's becoming more and more popular, even in private companies like Foundry Commercial. I've been the CFO of public companies, and of course, you're always doing that benchmarking for the executive staff for your disclosures. But internally here at Foundry, we're doing that on an annual basis. And we also compare that against both their functional responsibilities and in our comparative industries. We review the comp data, and then we'll also look at supply and demand each specific market. As I mentioned, we're in Raleigh and Charlotte and Nashville and Dallas and Orlando and Miami, very diverse markets. So there may be premiums or discounts added into each of those markets depending on the demand. And then when we step back and look at it, we almost take an investment view on the individual like we do with an asset that we're looking to acquire. If we want to purchase an office building or invest in an office building or take on a leasing assignment, the first thing we look at is the current rental rate that tenants are paying, and how does that compare to the market? Will it be rolling up? Are they already above market? Are they rolling in the market? And how can we take advantage of those gaps? We want to make sure that as we invest in an asset or we invest in an individual, that we're getting a market return for the input that we put into it. So when you lose an employee, you're losing knowledge, you're losing experience, you're losing information on where the skeletons might be buried or the dust bunnies in the corner of the closet, and you're already committing to potentially another 15 or 20% increase because you may have to go to a recruiter to bring that person in, or you're paying an upmarked contract rate to bring a temp employee in. It's much easier to benchmark against the market and know what that individual is worth, so you're not having the conversation a month later about trying to retain that individual, because the next person coming in on the street is going to be market, and you'll be paying a recruiting premium on top of it potentially.
Good points. So let's look at other forms of compensation as well. Besides salaries, more companies are offering benefits, incentives, and perks. We listed some here. When you offer bonuses or other financial incentives, be sure you set clear rules for your programs, set targets or goals that can be quantified, make the rewards worthwhile, and most important, don't make promises that you can't keep. So let's look at some bonus factors, and here's some parameters companies use to determine some bonuses. The combination of individual and company performance, individual team and company performance. Some look at just individual or company performance. But companies that don't currently offer bonuses may really want to consider doing so in the future as a way to attract and retain top-notch individuals, specifically as we're focused on accounting and finance professionals. Really, more companies are looking at this area for sure. Most common benefits offered employees right now, as you can see from the slide, aside from health insurance, reimbursement for tuition and professional certifications, is among the top benefits offered. Many companies I speak to and consult with that are not on top of these most common benefits as a perk are missing an opportunity, because this really affects the individual employee's paycheck. So, what is your medical insurance contribution? What is the dental insurance cost, life insurance? This is being asked by the candidates more and more as we head into offers and negotiations. today than before because they really do impact the employee's take-home. So question for both Katrina and Eric. Katrina first. What common benefits or benefit that your company offers garners the most interest from the job seekers?
Yeah, I mean, certainly a competitive salary is number one. I mean, hands down, they're comparing against the benchmark and typically looking for an increase from where they were at their previous company. So on top of the salary, we typically offer a bonus, which is measurable. There's probably ways we can improve that. It's driven off of company performance. And there's probably ways that we could do a better job of driving that based on company and individual performance. One of the ones that we don't offer today, but I'm asked about it at every single all hands, is a 401k match. And it's a challenging one because it's rather expensive. It tends to be 3 to 4% of your salary matched in 401k. And so it would be a great benefit. It's an expensive one. And, as a company that's still trying to grow profitability, that's a tougher one. Employee stock purchase program is a really good benefit. Typically, it gives them the opportunity to buy stock at a discount. And that can be a really great way to kind of encourage savings and investing in the company. But so here in Silicon Valley, a lot of what you see, we have free meals. We have free breakfast if you're here before 9, which encourages people to get in early, and free lunch every day. So the meals are great. And so it does cost us a bit, but it also keeps people on campus, and it saves on all the commute time back and forth to lunch. And it means that people are sitting down with other people on their team every day to eat lunch, which is great. We also offer a gym on campus. To me personally, the one that I really appreciate is the commute benefit. It's just horrible traffic here in the Bay Area, and there is a bus that takes people from San Francisco, just one bus, but it takes people from San Francisco down to San Jose, which could be a 2-hour commute. And then another one that we offer that I think is a differentiator is we offer 10 weeks maternity leave, paternity leave, or adoption. And I think that's a pretty good one for the demographic. I would note that, mature companies, and I worked at a number of large companies, if they tend to get into cost-cutting mode, they do look at a number of these different benefits as synergies or cost-cutting opportunities. And then you have to think about employee morale and what it does to the culture of the organization. But I would say that some of these, specifically say the free lunch is a good culture generator for us.
I think you're going to have a lot of applications after this. Eric, any common benefits that your company offers?
Yeah, I was going to say, thanks, Katrina. I've received 3 texts and 2 Skype notices from my accounting team. We give them breakfast on Friday. So Friday morning is breakfast, and now everyone wants breakfast every day. So maybe I'll have it at 7:30. As a private company, some of the bigger wealth creators are something that we don't have available to us at already, like stock options and stock purchase plans. So our benefits are more cash focused. As Katrina mentioned, we do offer salary and bonus. But as you look at that, your 8 triangles there, we actually offer all of those across the board. So the feedback that we consistently receive from new employees is that for such a small company and a private company, we offer a very competitive benefit package with name brand vendors. We use United Healthcare and Fidelity. We offer a 50% match on the first 7% of your 401k. We have a very high participation rate in that. But the biggest attraction is that our benefits are also customizable. So we offer your standard, not a Cadillac plan, but like an HMO or PPO, full meal deal. We offer the high deductible with HSA subsidy, and we also have the 125, the various cafeteria plans. we have a wellness benefit that also significantly reduces our medical costs. And having been at, I think, about 10 companies in my career, there's no question that I'm currently paying the lowest medical benefits I've ever paid, even in light of where we are in U.S. medical costs across the board. So the other benefits that we offer are more the softer benefits. We're casual every day. We're jeans on Friday. We do offer the breakfast on Friday mornings. And I don't want to steal thunder from a later slide where we talk about engagement, but we really think that culture helps to fill that hole of stock options and equity, and that helps to offset or add on to the fact that we offer a full suite of all of those benefits that you show there on your slide.
Yep. Great discussion. So next, incentives and other benefits that our companies are being offered. Just a few, spot awards for individual and team achievements, and profit sharing and retention bonuses. We talked about in the United States the 401ks and the match. And finally, time off is an extremely desirable perk. I heard the 10 weeks maternity, paternity that Katrina's company is offering. That's right up there with some of the best. And, average paid vacation time employees enjoy is 14 days in the first 5 years. This is, and this is recent data of 740 human resource professionals that we surveyed in Canada and the United States. That included 9 paid holidays and floating holidays as well. So just some stats for you. Let's get to the next polling question. And what is one strategy you would use to increase employee engagement? Again, what is one strategy you personally would use to increase employee engagement? Hire employees who fit the corporate culture, foster collaboration, recognize employees for a job well done, share the organization's end goal and the vision, if you will, and how their work contributes. And just one answer from each one of you that are participating, please. I know we're running up against the clock. We're going to have very little time for the Q&A. We will try and respond back to you through email. If you did submit a question, we will answer those questions that we don't get to through email. So the responses, please, to this polling question? Yeah, pretty much across the board. So next slide, please. Improving employee engagement. How satisfied is your finance and accounting workforce? In a study that Robert Half and Happiness Works, it's an outside organization that we partnered with, we found that out of a total of 13 fields surveyed, accounting workers ranked 7th in terms of overall job happiness. Finance professionals came in 12th. What can you, as an employer, do to increase job satisfaction for your valuable accounting and financial staff? There's just a few things here that we talk about. But Katrina, question for you. What engagement strategies have worked for you?
Yeah. I think part of what keeps people engaged in their work environment is they really do want to like the people that they work with. They want to go to work and see their friends every day. And, whether this is someone they've worked before or someone that they've just met, so you do want to enable that kind of environment, but one that's inclusive to all employees, not cliquey or anything like that. So, certainly as a leader, I try to be positive and communicate. So I want to share good news. I want to show appreciation for individuals and recognition, and then listen to different individuals. And then because, finance is the type of activity, a lot of people are at their desks or in their meetings staring at spreadsheets. And in order to foster, that type of environment, we have to put social activities on the calendar. We put events on the calendar so that we feel connected, whether it's a birthday party or a sports day or an offsite or a team lunch. So we are creating these events for people to develop that kind of desire to come to work and be with the people that they are with every day.
That's great. And Eric, any strategies that you could share with the group?
Yeah, you bet. Again, as I mentioned, we're really geographically spread out across the Southeast, so it can be difficult to engage folks. Even though we're cloud-based and we're using a lot of the social media applications, it's still difficult to get that culture and engagement across the whole platform. So each of our offices is in a different stage of maturity as well because of some acquisitions. So it's a unique makeup of individuals and cultures. So some of the things we've done are creating local culture committees within each of those offices, and that includes both employees and executives. We use targeted and branded emails to specific groups so we can communicate various things that are going on in the organization. We have an absolutely amazing in-house produced quarterly, I don't call it a newsletter, it's literally a marketing material of what's going on in our platform across the board. And we also have weekly training calls on various topics every Monday for about 45 minutes. And we're teaching not just about your specific department and things to think about, but what's going on in the organization and how the company really makes money. And similar to what Katrina mentioned, we do take those moments to enjoy fun time. We had an amazing Halloween party last week with, I think we had 50 kids going through the office. We also just decided 2 in the afternoon on Thursday, we went and did a kickball tournament at one of the gymnasiums of our clients, and we only had one workers' comp claim, so that was good. My team was pretty bad. No offense to those on the line, but we had a great time. So it's really about, as I mentioned earlier, viewing your job as more than just work. It is again your time, your talents, and we're honored that you're on the team and sharing that with us. So how can we leverage each individual to a greater goal?
Great engagement strategies from both you, Katrina, and Eric. Thank you. The last polling question that we have, folks, is if you could be, again, a fun one, if you could have one superpower, which one would you choose? The power to materialize funding at a moment, the power to predict the future, the power to see more than red and black, the power to communicate with colleagues, and the power to anticipate and master new technologies before they emerge. So just hang on 1 second, just one question or one response, please. And do we have the results? Sorry to speed up here, folks. We're up against the clock. The power to predict the future. I would second that. I think that you're all right on. So let's get to, I think we have time for one question. And I think it comes, and I'll throw this out to Eric and Katrina. How do you recommend those in their first professional job find a mentor? Should they look in their own company? Should they look outward? Any tips on how to find, and I hear this often. So Katrina, could we start with you?
Yeah, it's a very good question, and I still think about that all the time. A real mentor is someone that you can be open with, and they are open back. So to me, a mentor is someone who, is willing to be honest, willing to listen, willing to share their experiences, but then also importantly, willing to help you. Like a valuable mentor would be someone who, might even be a hero for you in terms of finding a job. So it's hard to find. I would suggest go ahead and put time on an executive's calendar. Reach out to someone and just say, hey, I wanted to pick your brain on something for 10 minutes. Or, hey, I saw your presentation at such and such. Would really love to, grab a coffee. Or, you have great experience in this thing. This is something that I'm, wishing to get more experience in, how can you help? And I think by asking the question, it's hard for someone to say no. So I would say be a little bit persistent in terms of, whether you send an email or two, might take a third email. But then also perhaps think about offering something in return. In terms of, would love to share my experience with something, or maybe just what you offer in return is someone to hear their stories. So reach out to people from even your college class or your business school class, or professors or people that you've worked with, even if it's someone at an old company. And one thing to do might be to just send an email saying, hey, I had this situation come up, and it reminded me of that time that you did X, Y, and Z, and I really learned from that experience. And, so you give a little bit and you'll get a little bit back, I think.
That's great. Eric, any quick tips?
Yep, you bet, Paul. I heard the gong ring there in the background. I totally echo Bianca's, not Bianca, I'm sorry, Bianca's the gal that sent the note. Katrina's comments. I recommend both inside and outside your organization. The mentor inside is valuable because it shows your engagement and your interest in the organization. It's kind of like going to your college professor and saying, hey, I have a question about this chapter. That goes a long way to building goodwill. But you have to have that counterbalance outside the organization to really give you an objective view.
Well, I just wanted to say thank you to Katrina, Eric, and to everybody that participated today. Really good insights, strategy, and tactics from our panelists, so thank you. Just a reminder to everybody that is participating, you can download the 2018 salary guide, and you have access to our salary calculator at roberthalf.com/salary-guide/finance. All attendees will receive an email with a link to the recorded discussion. 1 unit of CPE credit will be awarded to those who responded to 3 out of the 4 polling questions. Only CPE is offered to those that attended live, I might add, and CPE certificates will be sent out via email 7 to 10 business days from today. Again, thank you very much on behalf of Robert Half, and good day.